Welcome. My name is Lindsay, and I am from the Office of Total Rewards. In this video, we will review the 3 flexible spending accounts, or FSAs, that the University of Rochester offers to eligible employees. A healthcare FSA is a tax advantage savings account that allows you to set aside money for eligible expenses on a pre-tax basis. You would pay out of pocket at the point of service and get reimbursed for the cost of your qualified medical, prescription, vision, and dental expenses. To elect an FSA, you must be actively employed in a benefit-eligible position at the university. Unlike a health savings account, you do not need to have medical coverage through the university to have an FSA. Your annual FSA election in 2020 cannot exceed the IRS maximum of $2,700 per year. And if you are married and file taxes jointly, you and your spouse can each have an FSA, but the combined total cannot exceed that max of $2,700. Eligible dependents that you can use your FSA on include your spouse and your qualified tax dependents, even if they are not covered under your health care plan. You can elect an FSA either during the annual open enrollment period, within 30 days of your hire date or the date you become a newly benefit eligible employee, or within 60 days of a corresponding qualifying event. When you elect an FSA, you choose the total amount you want to contribute for the calendar year. However, your election must be between the $100 minimum and the IRS maximum of $2,700. Your annual election will be prorated based on the number of pay periods remaining in the calendar year and will be deducted pre-tax from your paycheck each pay period. Once your FSA is effective, you can reimburse yourself for qualified expenses incurred while your FSA is open. Effective dates would be January 1st if you elect an FSA as part of the open enrollment period, or the first day of the month that your health plan election begins, or the first day of the pay period after your election is processed. New for 2020 is the FSA carryover rule, which states that employees are only eligible to roll over FSA funds from one year to the next, and this has a max of $500, if they elect to contribute to their FSA during open enrollment. And we will go into further details on this in a future slide. As you are making your decision if an FSA is right for you, there are 3 main benefits. Starting on the effective date of your FSA, you have access to your full annual election. Your contribution is a pre-tax payroll deduction, and the reimbursements you receive for qualified medical expenses are also tax-free. So you save on taxes through your contributions as well as your distributions. So as an example, if you elect to contribute $500 to your FSA for 2020 during the open enrollment period, on January 1st, 2020, you will have access to your full $500 election. If you buy prescription glasses for $200 on January 2nd, you would pay out of pocket at the store and can submit a reimbursement request that same day. You can receive your full $200 reimbursement for the cost of the glasses in January, even though you have not yet contributed funds to your FSA. As you will see in the example, your FSA contribution in your first payroll is still determined by dividing your total FSA annual election by the number of pay periods remaining in the year. So how can you use your healthcare FSA funds? Medical, pharmacy, and dental claims that are processed through your university health or dental plans will be automatically reimbursed unless you opt out of the automatic reimbursement feature. And in that case, you would choose which claims you'd like to manually submit for reimbursement. Please note, depending on your third-party administrator, Aetna or Excelis, there may be restrictions for the automatic reimbursement feature. We suggest that you contact your FSA administrator with these questions. Your administrator is Lifetime Benefit Solutions for Excelis members, or if you do not elect university health coverage, you'll also go through Lifetime Benefit Solutions. And then if you are through Aetna, your FSA administrator is Payflex. You can set up direct deposit so your reimbursements are deposited directly into your personal banking account. Otherwise, you would receive a check for your qualified medical expenses. If you or your eligible dependents have qualified medical expenses that are not covered under the university health or dental plans, or you opt out of the automatic reimbursements, you can submit claims using your online account with your vendor's app, or through a form, and all forms can be found on our Total Rewards website. And as previously mentioned, your FSA can be used to reimburse qualified medical expenses for yourself, spouse or domestic partner, and tax-dependent children up to age 26. Qualified expense is a term we have used a few times in this video, and there are a couple things to know about what that means. First, qualified expenses are designated and governed by the IRS, and the list below gives an abbreviated list, not all, of the expenses that you can use your FSA for. The full list can be found by looking up Publication 502, and this is also available on the Total Rewards website. To use your FSA for a qualified medical expense for yourself, your spouse, your domestic partner, or your qualified tax-dependent child, the expense must be incurred after the effective date of the HSA. So if you are a new hire and your benefits are effective the first of the following month, that means any expense as of that date would be eligible to use your FSA towards. You can only contribute to a limited purpose FSA if you're also contributing to a health savings account and are covered under the Your HSA eligible plan. A limited purpose FSA can be used to pay for qualified vision or dental expenses until you meet your deductible on the HSA eligible plan. After you meet your deductible, you can use your limited purpose FSA to reimburse yourself for any qualified medical expenses incurred after the deductible was met. You have immediate access to your full annual election as of the effective date of your account. So this means you don't have to wait until you've contributed the funds through pre-tax payroll deductions, just like the normal FSA works. And the IRS annual FSA maximum election for 2020 is $2,700 per calendar year, and this maximum applies to the healthcare FSA as well as the limited purpose FSA. Please note, limited purpose FSA claims do not qualify for automatic reimbursement. This means you need to submit your claim using your online account, your vendor's app, or by using a form that can be found on the Total Rewards website. The Dependent Care FSA is available regardless of your health care plan choice. It is an option to allow you to pay for a portion of your eligible daycare expenses with pre-tax dollars. Generally, the Dependent Care FSA can reimburse daycare expenses for dependent children under age 13 and dependent adults claimed as a tax dependent, but it is always good to check with your FSA vendor to confirm that your expenses will be eligible. Furthermore, the Total Rewards website has IRS Publication 503, which lists all eligible dependent care expenses. The annual contribution maximum for 2020 is $5,000 per family per year, and there is no rollover with this benefit. Any unused funds will be forfeited at the end of the year. The last thing to know is that dependent care FSA funds build up over time like HSAs and are different than healthcare and limited purpose FSAs that give you access to your full election as of your effective date. So the money available to you in your dependent care FSA depends on the money that you put in the account through your paycheck deductions. As previously mentioned, there is new eligibility associated with your FSA rollover as of 2020. The IRS maximum that employees are allowed to roll over from one plan year to the next is $500, and this applies to healthcare FSAs and limited purpose FSAs. To be eligible to roll over healthcare or limited purpose FSA funds, $500 or less, from one year to the next, employees must elect to contribute to either FSA during open enrollment. The change for 2020, and this is important to note, is that you must elect to contribute during open enrollment for the upcoming year to receive rollover funds. As you look at the examples, employees are allowed to roll over from their healthcare FSA to their healthcare FSA in the next year, or from their limited purpose to their limited purpose, as well as from a healthcare FSA to a limited purpose FSA, and vice versa. So to recap these new rules, you must elect to contribute during open enrollment. This applies to healthcare FSAs and limited purpose FSAs, as dependent care is not eligible for rollover per IRS guidelines. And regardless of if you are eligible to roll over or not, all FSAs have until April 30th of the following plan year to submit claims for the previous year. So any 2019 claims have until April 30th, 2020 for the claim to be submitted to the FSA vendor. So as we get to our last slide, this is just a reminder of all your FSA resources. You can visit your FSA vendor's website to view your account balance and claim history, submit a claim for reimbursement, enroll in direct deposit, and view upcoming payments for claims submitted. For additional information regarding IRS rules and regulations pertaining to flexible spending accounts, we would have you view IRS Publication 502 and or 503. And our Total Rewards website can also be a great resource. Additionally, we have vendor information. Aetna members work with PayFlex, Excelis members, or employees who do not elect university healthcare work with Lifetime Benefit Solutions.